All right, let's jump right in. For years, there's been this powerful story in the financial world, a kind of myth about two giants, gold and oil, always moving together. But that story, it's taken a wild turn, leading to what we're calling the Great Disconnect.
For the longest time, this was just gospel. The logic felt sound. When oil went up, gold would follow suit. It was a rule of thumb a lot of people built their entire investment strategies around.
And that's the billion-dollar question, isn't it? In a world that's changing faster than ever, we have to ask ourselves, does that old rule still hold any water? Well, let me tell you, the answer might just surprise you. Okay, so to really get what's happening now, we've got to jump in the time machine and see how this whole myth got started in the first place.
Now, here's what's so interesting. The connection wasn't some deep fundamental law of economics. Nope, it was all about timing. Back in the 70s and 80s, you had oil prices skyrocketing, which got everyone spooked about inflation. So what did panicked investors do? They piled into gold as a safe place to park their money. They rose together, and boom, an illusion of a permanent link was born.
But just like any good story, there's a plot twist. The world today is a very different place, and that old relationship between gold and oil, it's been completely turned on its head.
The 2008 financial crisis wasn't just a bump in the road, it was a total earthquake for the global economy. And in its wake, you've had other massive events like the pandemic and this huge global push for green energy. All of these things have created brand new forces that are pulling gold and oil in totally different directions.
So enough with the stories and the theories. Let's look at the cold, hard numbers. Data doesn't have an opinion, it just tells it like it is. And the truth here? It's absolutely fascinating.
Real quick, before we dive into the numbers, let's talk about correlation. It's just a fancy word for how two things move together. Think of it like this. +1, they're best friends, always in sync. -1, they're total opposites, doing the exact reverse of each other. And a score near 0, it means they barely know each other exist. Got it? Awesome.
So check this out. If you look at nearly 4 decades of data, the correlation between gold and oil is just plus 0.21. I mean, that's barely a relationship at all. Statistically, it's pretty much background noise. It shows that even when the myth was at its strongest, the actual long-term link was incredibly weak.
But now, just look at what's happened in the last couple of years. The whole thing is flipped on its head. We're at negative 0.60. This is huge. It means they're not just disconnected, they are now frequently moving in opposite directions. The old rule isn't just broken, it's in reverse.
Let's look at a quick snapshot from today. Gold's flying high, oil's, well, it's chugging along at a moderate price. But here's the kicker, the gold-oil ratio. Right now, it takes about 60 barrels of oil to buy 1 ounce of gold. The average over the last 20 years, just 22 barrels. That is a massive, massive gap.
Okay, 60 barrels of oil is a little hard to picture, right? It's just a number, so let's make this real. What does that actually look like?
Get this, a single ounce of gold, 1 little ounce, can now buy you over 9,500 liters of oil. Just let that sink in for a second. That one number tells the entire story of just how far apart these two have drifted. So the big question is, why? Why are they on such completely different journeys now? Well, the answer is that, deep down, they were never really the same kind of asset to begin with.
And this is really the heart of it all. They are just fundamentally different animals. Gold is all about money, fear, and what the big central banks are doing. It's an asset you hold just in case. Oil, on the other hand, is about what we do. It's something we use up. It's fuel for our factories, our cars, our planes. It's a right-now commodity. They're tuned into completely different frequencies of the global economy.
Okay, so we've busted the myth and we know the why behind it. Now, let's get to the most important part. What does this all mean for you? Well, it means it's time to toss out the old playbook.
Seriously, if you're trying to figure out where gold is headed, stop looking at the price of oil. Instead, you need to be watching these key drivers. What are the central banks doing with interest rates? Is inflation heating up or cooling down? And what's going on in the world? Any new conflicts or crises brewing? Because in times of uncertainty, that's when gold really steps into the spotlight.
So let's bring it all home. The bottom line is this. The idea that gold and oil are joined at the hip is a myth from a different era. The data proves it. They are on 2 totally separate tracks, driven by completely different engines. And for anyone looking for long-term wealth preservation, gold's resilience and its lower volatility really make it stand out on its own.
So we've just taken a hammer to one of the biggest rules in investing.
It really makes you think, doesn't it? What other market wisdom that we all take for granted might be ready for a rethink? That's definitely something to chew on.